guys, welcome to BlockParty Trading. Wanted to do a quick update on Bitcoin. We should see some volatility later today as we've got Chairman Powell from the Federal Reserve giving a speech. It's in about 3-4 hours from now, and that is likely to give us an indication of the Fed's thinking regarding interest rates, what we want to see as a pause or reduction in interest rates. Either of those scenarios would be very, very bullish for risk-on assets like Bitcoin. If, however, the tone of that speech, gives any indication, perhaps that they think that inflation is still an issue and that we're going to see maybe continued rate rises, you can expect to see some negative price movement from Bitcoin. In terms of our sort of long-term analysis, I think we issued a couple of videos at the start of the week where we went through our logarithmic growth curve, which is a very long-term prediction. Effectively, what the conclusion that we were drawing from that is that we've seen our pi cycle bottom and our pi cycle reversal, and that from those two events, we'd anticipate seeing growth here, significant growth, back up towards all-time highs, or at least a 3-figure percentage increase. So, we're looking for 100% price gains from that point when that occurred back in March. Now, on a more sort of micro level, so whereas we are expecting to go up, significantly in price, within that price move, that long-term price move, we're going to see significant volatility because, after all, this is crypto. So we wanted to have a look on the 4-hour chart and just give an idea of what it is that we're looking at. So we'll come over here. So this is the naked Bitcoin chart. We're just kind of taking a snapshot here of everything that's occurred since we had this sort of bullish movement back on the 13th of March. So as an overview in terms of the kind of the formation that I think that we're looking at, I think that we're in a tracking a parallel channel like this, which is actually a bullish formation. We would call that a bull flag, and we'd anticipate breaking up and out of this downtrend. I think the other conclusion that we can draw from that chart is that this point here, what is that? 27,166 is a very significant price. So we can see that when we had our bullish breakup, we broke above it, and then this area provided support to price for a long period of time during April, and it was only then in May that we broke down below it. When we tried to re-break, it presented resistance to price. We broke above it, had a pullback, came back through. It's interesting. The other conclusion I think that we can draw from this comes from the CDV down below, which is giving us our cumulative delta volume, effectively acting a bit like an RSI. This is showing us that we're oversold here, and that's when we anticipate this flow through of volume. So you can see that the volume spiked when we saw this big wick down to the 25,000 range. We can see that it was the cumulative volume breaking this trend line that saw us make the initial breakout over our price resistance point. As volume decreased, we fell back down, and then another volume surge saw us break and confirm above it with this retest wick here. I think if we draw a trend line from this high points, we're going to get another confluence here, and that is that we are looking to head towards a trend line break. So this green line here on the CDV is basically a resistance point. It seems to be about this price level here, that we're unable to break above that. So you can see when we were there, we broke back down in the volume, we've come back up, and we've stalled here. So this resistance is aligning perfectly with the trend line that we've just drawn on there. And so the way that this formation would work, having tested the bottom, we've crossed this resistance, which is sort of the mid-range, almost exactly, of the bull flag. And so we're going to anticipate testing this upper trend line now. Keep an eye on the volume, because when we see the volume break this resistance and break this trend line, then I would anticipate we'll be at the top end of the trend line on the actual price chart, and that should be the catalyst for the breakout. In terms of the fundamentals, Powell speaking can have a major impact on the market, and we're likely to see some significant volatility, so be careful with trades going into that. If you've got positions in profit, you're probably better off taking profit prior to him taking the podium, because sometimes he can say things and they're misconstrued or taken out of context and can cause the market to move in a way that's not rational. We're also seeing a phenomenon over the past kind of 12 months, which is that Twitter sort of hypes up these events, which creates unnecessary volatility going into the actual speech. So generally, I would say, if you've got positions in profit, just close them. You can go back in later following the speech when things have sold down, but you don't want to be in there if they're going to tank price with a loose word or phrase. Overall, bullish formation, broken the resistance, completed the retest. When we need the volume to come in now, hopefully something positive this afternoon from Powell's speech could provide the catalyst to that volume, trigger the algorithms, trigger the bots, or trigger the individuals who are going to make those buys, push us up towards testing this trend line. I think we've kind of gone over this several times before, but if we pull out onto the daily chart, this is our current price target. So this level here is the unfilled CME gap from back in early May 2022. Price regularly goes back and refills these gaps. So the gaps between where the market closed and reopened at the Chicago Mercantile Exchange, which closes over the weekends. So this will represent where we close Friday. This will represent where we open Monday. The traders on that exchange really do not like having this unresolved scenario, so they will try and pump price to refill this point here. So our target for this bullish breakout, the next leg up of this, long-term uptrend, which has really been running all of 2023, would be to take us to 34,000. I know that we've been hearing lots about potential corrective moves down to 25,000. I have a strong suspicion that the wick that occurred there Friday the 12th, I have a strong suspicion that that was the completion of the corrective move, and that now we're free to move forward. This is all based only on technical analysis, so obviously understand the real world events will trump that. So, if you don't base, long-term strategies on this, use this as a resource to be used in confluence with your own analysis and your own understanding of macroeconomics. Any questions, drop them in the comments below. Go over to our website, blockpartytrading.com. You can get a 7-day free trial, either of our signals package, where you get all the trades that we're making, or you can get access to the indicators that we use to do this analysis. Thanks a lot. Bye.